Oh no, there's a lot of value to add in the large cap space. In a trending market as it's been up, it looks like you can't add any value into the large caps, and that's why everyone's going to Intex in the top 20 and then trying to find alpha outside the top 20. But if you actually do the analysis, there are large moves in large caps each year, 20, 30, 40% plus, and getting those right is not always obvious and can be difficult. So there is definitely value to add having an active manager managing that risk for you in the large caps. Oh, the most defensive earnings on the ASX today, I think, are something like Woolworths, and historically, consumer staples are quite defensive in terms of the earnings stream. But also, I think what is also underappreciated is the wagering operators, Tabcorp, very defensive earnings streams, and also the casino operators to some extent are a lot more defensive in a downturn. Well, management's really important. One of our filters actually that we use here at Perpetual. So before any stock makes it into our quality universe, we have had to have a one-on-one meeting with management. And there are a whole lot of ways you can assess management. So previous track record, the strategy that they're outlining, whether they're believable, have they got a good track record of executing. But sometimes, it's about assessing the actual person, what style of person they are. For instance, I'll give you an example. Woolworths was going through significant change, not only at the board level, but when Brad Banducci was appointed, the market didn't like Brad, but we liked Brad because we felt he was the type or style of manager where he was an under-promiser, over-deliverer. And they're the types of guys or management team that we like, people who under-promise and over-deliver. Well, a lot of people talking about disruption. Everyone talks about Amazon, and there's no doubt that they are a threat. And all investors are trying to work out who has the most to lose. I think the market's well seasoned as it stands today to the threat of Amazon. But once they're here, then we'll see what impact they actually have. And there's no doubt they will have an impact. The question is whether it's in the real short term or it's more in the medium term. And a lot of the discretionary retailers have been big underperformers on the back of the Amazon threat. In particular, the electronics retailers, JB Hi-Fi, Harvey Norman, even Super Cheap as well. So people are aware of the threat. How it actually plays out, I think, might be a little bit different. But from our point of view on the discretionary retailers, we think Amazon's definitely a threat. We don't think the valuations are cheap enough just yet to actually to be involved there. So we feel that where the risk lies is, if you look at the outlook, the market is still expecting quite healthy sales growth for a lot of the discretionary retailers, and we think that's where the market's probably being a bit over-optimistic. Well, I think there's definitely Amazon will be a threat to Woolworths. If you have a look at the experience of Amazon around the world, grocery has been the one area where it's been very difficult for them to actually gain traction. I think the purchase of Whole Foods will definitely allow them to gain more share in grocery. However, they have bought bricks and mortar. So there is definitely value in a high quality bricks and mortar business. But we're under no illusion, and neither is Woolworths, that there will be an effect from Amazon. And you can see that by Woolworths' reaction, investing in pick up in store, express home delivery. So we feel there's definitely going to be an effect at the margin, but Woolworths are investing ahead of that. Another stock that we're thinking differently to the market on is AMP. We think it is undervalued relative to peers and to the market and to the assets that it actually owns. So it's got a great suite of assets. The management team have earmarked the life business, Mature and New Zealand as non-core. So we think that there could be a lot of value realised from selling of those businesses, and that those proceeds can be reinvested, given back to shareholders in the form of a buyback, or reinvested in the core business, which is the Australian Wealth Management business, AMP Capital and the AMP Bank.